All right, I'm going to do today's video on gold. We knew there was going to be an attack at 1800. Gold didn't actually quite get to 1800 the other day, but that's typical. That's what the banks do. They usually, if you're going to run it up to a target, they'll do it in the pre-market, and then the attack will begin in the pre-market so that traders can't get out. The market is always already dropping by the time the open happens. So if you're trying to get out on a tag of 1800, the odds are not good that you're going to get that chance because it's going to occur in the pre-market, and then by the time the market opens, um, the market they will have already turned it back down. So anyway, we knew this was coming. We knew that the banks, were not going to let gold go through 1800, if at all possible. So this was expected. So now we're kind of in limbo here. Let me draw this consolidation box in. All right, so officially we're still just stuck in this sideways consolidation box. We haven't got anything that would, that's clearly a confirmed breakout yet. We're starting to get a little late in this intermediate cycle. We're on week 14, I believe. Let me count it. Yeah, so we're on week 14, and usually the most normal intermediate cycles run about 20 to 25 weeks. So we do still have time for a breakout to occur here, but one of my rules is that breakouts that occur late in a cycle are prone to failure. By that I mean a false breakout that reverses back down. So at 14 weeks, we're starting to get a little dangerous here to where I'm going to be a bit leery about trusting a breakout that might occur this week, or next week would be week 15, because you've got to have some time for the market to move down into the or for the declining phase of the intermediate cycle, and typically that takes anywhere from 4 to 6, sometimes as long as 8 weeks during that downward declining phase. So if we were to top next week on week 15 and then have 8 weeks into the declining phase of the intermediate cycle, that would put us at 23 weeks. So you can see how it's beginning to get a little bit dangerous here to trust a breakout. It's not, it's not completely off the table. If we get a strong push that closes above 1800, I would say, if we can get to 1810, I would say at that point the odds are pretty good. The breakout is going to hold, and we're going to get, a run to 1900 before this intermediate cycle tops. But at this point right here, we're kind of in no man's land. We're kind of in limbo. I don't really know which way this is going to go, and I'm not going to make a prediction. If we can't break above 1800, then we could continue to be stuck in this consolidation box. And I don't really think that, if we were to start an intermediate decline here, I really don't expect it to be a really scary correction, nothing like this. Something maybe more looks like this, kind of mostly sideways, just choppy. There's just the fundamentals are just too strong for the gold market, I think, for the ICL to really unfold as what we've kind of become used to, that really scary sell-off that, where everybody panics. We get that nasty bloodbath phase at the end. I'm kind of the opinion that fundamentals are probably too strong now for that kind of an intermediate decline to happen. And I tend to think the intermediate declines at this point are going to be more like these choppy, slightly downward corrective moves that don't actually shed that many points, but they just eat up a lot of time and they frustrate people. And people are already getting frustrated, now. We've been stuck over 2 months in this sideways chop, and people are ready for gold to break out and move. And I'm going to join the party too. I'm ready for this thing. I'm sick of this thing going sideways. But we are getting late enough in this daily cycle, or this intermediate cycle anyway, that it is possible that this this could turn out to be an intermediate top, and we just don't get that breakout above 1800 that we're looking for. and we just continue this chop for another month and a half, and maybe another test of this 1675, maybe even down to 1650-ish level here, and then then we take off, and then we finally get our trade of the year. I was really hoping that gold was going to break out above 1800 here on this second attempt, but the banks just squashed that and kept gold locked in this churn here. They were defending this 1750 level, and I'm going to suggest use that 1750 as your stop. If you're long metals, it took a month and a half, almost 2 months to finally get through that resistance zone at 1750. So if gold were to come back down and close back below it, then I think at that point you just got to admit defeat, and the banks have won this battle, and they've succeeded in at least blocking gold at 1800. They were not able to hold the line at 1750. But if we close back below 1750, then I think you just have to accept that they have won the battle at 1800 for now, anyway. And we're probably going to be stuck, for another month and a half, in more of this sideways chop, and somewhere down here towards the bottom, we'll get our final intermediate cycle low, and then the really strong trending move that I've been looking for will come during that next intermediate cycle. So not completely off the table yet, but gold really, it absolutely has to hold above 1750, and it really needs to, get some traction quickly here and break out of this consolidation box, and give us some kind of confirmation that we're ready to start a trending move. And if it does, then I think you get on board for the ride to 1900 over the next 3 or 4 weeks. But if it doesn't, then I think you just got to accept defeat for now, and the banks have won this battle, and we'll go back to war here in 4 to 6 weeks, and we'll look for that trade of the year later in the fall instead of now, like we were hoping for.